Well, folks, welcome to our earnings call lab. My name is Brent Barclay. I'll be the facilitator today. Excited to have you as we jump into a how to listen to an earnings call webinar, a chance to kind of look at some of the tools and resources that many of you received during our building business acumen programs at your organization, as well as be able to look at a company. And the company we're going to be looking at this month is BlackRock. So for those that are new, excited to have you here. For those that have come back, excited that you continue to come back. Why do we do these? Let me give you just a high-level overview. I'm part of a company called Acumen Learning. We focus purely on the topic of business and financial acumen. What we find in these large corporations we get a chance to work with is that our senior leaders at these organizations are doing everything they can to drive greater financial performance, whether that be cash flow, profitability, asset utilization, etc., within their organization. In the end, you think about who really impacts the business. Well, it's actually the individual employees, the line leaders, et cetera. What we find is in these large organizations that these senior leaders doing everything they can to squeeze all of the financial statements, and then the individual contributors, the managers, directors, we get so focused on our individual area. We're functionally brilliant, very good at our functional roles. Yet we get so focused on our area, we rarely step back and see the big picture perspective. So you'll see on the screen there, it says Seeing the Big Picture. This is our New York Times bestselling book by our founder and CEO, Kevin Cope, where it helps those that have been promoted, those that are trying to get more understanding around business financial acumen, a practitioner's approach to how to think about business. In fact, we often say it's an MBA in 182 pages. The basics of how to look at both strategic focus of a company, but as well be able to, what I call, keep score, be able to look at the financial statements and assess what's going on. So we provide those programs we've had a chance to work with 34 of the Fortune 50 over the years, many of the Fortune 500, and we come into organizations and really help the employees understand how their company makes money, how decisions are made around the money-making process, but most importantly, what can each individual do to drive financial performance of the organization, to drive the strategy of the organization. As part of that, we provide a simple framework and a couple tools. And what we're doing today is we're taking that framework as well as the tools, and we're going to use that in how to listen to an earnings call. Now, you may be part of a publicly traded company. It's a great way to kind of quarterly get updated on what's going on in your organization and be able to align your activity to what the organization is trying to drive. Now, what if you're not part of a publicly traded company? Well, you may sell into a publicly traded company. We do a lot of sales organizations, sales enablement groups. I can't think of a better thing if I'm selling into a major publicly traded company to quarterly kind of do a check-in. What are they really talking about? What are their strategies? And then how does a partnership with our organization drive their results? For others, it may just be you want to look at assessing a company you may want to invest in. Well, today, what I want to try and do is I want to inspire you enough, do a quick review of the 5 drivers and then the 2 tools, but to inspire you enough to actually do this. I've been doing this for about 15 years here at Acumen Learning, and what I find is that employees that will take the next 2 or 3 quarters, take this information and actually apply it. It absolutely builds your credibility within your organization. In fact, we've had employees come back to me, participants in some of the programs. They'll say stuff like this. My manager says, "How come you know so much about our business?" Or they'll say, "Hey, I actually got a promotion because my interactions with executives, they could see that I understood what was going on in our organization." So it absolutely builds your credibility, which then opens up your career development, your opportunity to progress within the organization. And then finally, it drives the organization. The more employees that truly understand our business, how we make money, and quarterly do a check-in, what's going on, then be able to take your functional expertise, your functional brilliance, and help us make the right decisions. It absolutely builds your credibility, it builds your career, and it builds your company. So that's what we want to try and do today. So we're going to jump in and do a quick review of the resources and tools, the framework of the 2 tools, and then we're going to do it in the context of BlackRock, a major financial institution. We hear a lot about them, about $11.6 trillion of assets under management. Let's kind of see what they're doing and what's going on. So folks, let's get that chat box open. We're going to jump right in here. Open the chat box, and I want to start with just make sure it's working. So here's what I want you to do. Put in, where are you calling in from? Are you calling in from a city, a state, a country? Maybe you're calling from a location in your house. Where are you calling in from? My team and I, we're out of Salt Lake City, Utah. So just a little bit south of Salt Lake City, Utah, at the base of what's called Mount Timpanogos. If you're familiar with the Sundance Film Festival, that's just the Sundance Ski Resort is just on the north side of the Timpanogos, where we're kind of located. Come out here during the summer months. It's a great place to do mountain biking, to hike, and water ski and various things there. But in the winter, obviously, it's great for skiing. So love to have you here. Well, looks like chat box working just fine, so we're good there. Well, here's the second tool I'm going to be using is our polling. So let me open that and make sure that's up and running. So here's my question. My question is just a quick, have you had a chance to participate in this webinar? You should see on your screen a poll question and be able to answer that. Excellent. Looks like that's up and running. It's my first. So is this the first time you've attended an earnings call webinar? Yes, it's my first time. No, I've attended a webinar earlier this year. No, I haven't. I've attended something maybe last year. Now, as I described, this is a continued learning experience beyond the course for anybody who's been in the course. Now, if you haven't been in the course, no worries. That's okay. We'd love to have you here. And we'll talk about ways that you can access this content within your organization or individually as well a little bit later today. So we do these every month, different companies. Last month we did Tesla. We've got BlackRock today. Next month we're doing what was known as MicroStrategies, a Bitcoin company. Actually, it's a technology company that really created kind of a Bitcoin investment strategy. So we'll talk about them a little bit later. Similar in kind of this financial investment space as well. So we'll look at them next month. So here we go. Let's see how those results, I'll share the results here. Looks like, boy, we've got about 56% of us. This is your first time being here. So welcome. Good to have you here. Well, let me jump into the course itself and what we're going to kind of cover today. And I'm going to start with another poll question. My second poll question is, you're coming to a program on how to listen to an earnings call. So my question to you is, when was the last time you actually listened to an earnings call? You're coming to this program where we're going to talk about how to listen to an earnings call. When's the last time you listened to it? For some of us, it's this year, last year. It's been a while. I've never attended an earnings call. I'd rather go to the dentist. I at least have one of you who's responded that way. No worries. I hope to inspire you enough to say, you know what, this absolutely could be this could be valuable for me in my role here within the organization today. These quarterly calls happen every 3 months, obviously, on a calendar year. They're going to basically come out starting in April, will be your will be the Q1 timeframe. If you look at Q2, we're just finishing up Q2 right now, so the end of June, which typically means July and August when you're going to see the next one. So basically, whenever the quarter ends, the month after, or the 2 months after, that's when you're going to have these earnings calls happening. Now, they're not required to produce these or to hold them. That being said, it's like 99% of companies will actually do these. Well, it looks like here, let me share the results, that many of you have listened to this year. It's been last year. A few of you have never attended. 19% of us have never attended an earnings call. Well, again, my hope today is to inspire you enough to say, look, I can do this. I absolutely can take an hour a quarter, review my company if I'm publicly traded, review a company I sell into, a company I compete against, or maybe just a company I'm interested in or want to invest in. I'm going to provide you a simple framework and 2 tools that will absolutely help you to assess what's going on in these calls. Now, as you look at these calls, let me give you some data that you may or may not be familiar with. The data is around employees' understanding of strategy within an organization, as well as their understanding of key metrics and measures. So these earnings calls cover strategy. They also cover financial performance. Well, here's a stat that comes from Harvard Business Review that suggests about 95% of employees don't understand their company's strategy. Now, folks, I'm not talking about your company. This was done, multiple companies, multiple industries by Harvard. Even if you're 50% of your employees not understanding the company's strategies, that can be a problem. Well, here's another one. 90% of employees don't understand their company's important business metrics. Metrics like cash flow, free cash flow, earnings, EBITDA, operating income, gross profit, operating income, net profit, return on assets, return on invested capitals, return on equity, all these metrics that they throw out as if we all understand them, right? 90% don't understand what those key metrics and measures are. Well, imagine you're CEO of a major company, and the company we're going to be looking at is BlackRock here. It's their Q1 earnings call. Their Q2 is going to come up here in just a month or so. I can't think of a better time, by the way, to take a course like this, because you're going to get their most recent quarter, Q1, and here in about a month, they'll be providing their Q2 information. So you can kind of compare and contrast one quarter to another. Well, imagine you're the CEO of BlackRock, Lawrence Fink. He's a CEO and chairman, been there actually since inception. I actually didn't know this, but we hear BlackRock, but we also hear Blackstone, Apollo, KKR. These are a bunch of big investment firms. Well, BlackRock, Blackstone, what's the connection? Well, actually, Blackstone was the original company that Lawrence Fink kind of was part of, and they actually created a different type of investment firm within Blackstone. They spun it off a number of years ago, been publicly traded ever since. So BlackRock and Blackstone both have BlackRock was part of Blackstone initially. Well, here you're the CEO. You know that 95% of employees potentially don't understand your corporate strategy. 90% don't understand the key metrics and measures. Well, the question is, how do I go about impacting the organization? How do I drive real results? Here you are, the CEO of a major investment firm, leading global investment management firm, assets under management. That's a key phrase you'll hear, AUM, $11.6 trillion. So Blackstone's about $2 trillion. So it kind of shows you their comparison. One of the largest investment firms. Clients include large institutions like pension funds, charities, central banks, et cetera, insurance companies. Serve clients in over 100 countries. You have 23,000 employees. How do you kind of bring them all together? Now, if you're not as familiar, they're basically a large investment firm. Everything from you can do stocks through them, you can do mutual funds, just like you would in any kind of, Fidelity or Vanguard or any of these investment firms. But you also have stuff like private capital, where they're putting money into certain investments, infrastructure like pipelines and utility type of companies. So they're taking all this cash, they're investing it. They're taking large institutional funds and pension funds. They're trying to grow the money of the organization. Well, what is it that you think about this? 95% of employees don't understand corporate strategy. 90% don't understand key metrics. You're one of the largest. Assets under management, 11.6. Where does that money go? How do I get great returns to my investors? How do I make sure my employees understand what's going on? What is it I want my customers, our partners, they call them, understand about our business? Shareholders. What about any sort of partnership? There's a lot of partnership. There's companies where they're a majority owner, but there's also companies where they're minority owners. How do I kind of speak to what I'm trying to invest in as a large investment firm? Well, I've been in business for over 40 years. Our core focus, connecting more and more people to the growth of the capital markets. How do I help everything from individual customers to large investment groups to get access to capital markets, to invest in everything from AI to infrastructure to ETFs, et cetera? How do I drive the business? That's what this earning call is all about. A chance for a CEO, a CFO, to get in front of analysts, get in front of investors, get in front of their employees, and be able to speak to kind of where we wanted to go, how did we actually perform, and where are we going? Kind of articulate that to organization. Well, these happen every quarter. How can we get better at this? How can I be more comfortable listening to these communications, making sense of them, and doing something about it? That's probably the most important thing. When we teach our courses, as we do our initial kickoff, I talk to the participants and I say, look, in the end, our goal is to have a 5-star rating. We're like Uber, we're like Amazon. We got to get 5-star rating. We got to knock your socks off. A world-class experience. That's what we're going for. In the end, though, if you don't do something with it, if you don't take this information and do something with it, we've wasted your time. So the next 45 minutes, folks, I'm going to try and inspire you, give you a simple framework, couple tools to absolutely help you be comfortable. And my guarantee to you is this. If you'll take this information and use it the next 2 or 3 quarters. Now, if you want to do it on your own company, you can wait for the full quarters, but you can actually continue to come back here, engage. Next month, we'll be looking at, who are we looking at next month? I told you, MicroStrategy, the Bitcoin organization. But you can come back to these experiences or listening to your corporate communication. You do that 2 or 3 quarters, here's the outcome of that. I said it already. My guarantee is this: it will absolutely build your credibility. It will build your career. And the outcome of that is it'll drive your company results. Folks, you'll be more confident around these conversations and really help us make the right decisions. So that's what I want to try and do in the next 45 minutes. Let's jump into that. So in the end, by the way, you're going to get this tool. It'll be available at the end of the course today. So you'll get access to that and have that available for every quarter you may want to review a company's quarterly performance. So there's 3 steps to our tool. The 3 steps are: you got to prepare for these calls, you got to analyze these calls, and you got to apply these calls. Again, this is the one, man, this is where I want you to spend your time. Get comfortable with it and do it. 2 to 3 quarters, absolutely build your credibility, build your career, and build your company. So let me go ahead and jump into the prepare phase. Quickly, as I said before, a high level for those that haven't had a chance, 19% never participate in an earnings call. Typical time frame on these: once the quarter's in, usually 3 weeks out is kind of the early ones, but they'll actually go up to 2 months after the end of the quarter. They'll communicate. A typical call lasts around an hour time. That's the usual. Starting with an initial prepared remarks where you're going to have senior leaders, typically the CEO, CFO, not always, but very common to have those individuals. Sometimes they'll have operation leaders. Sometimes they'll have senior revenue generating leaders, etc. But they take about 20 to 30 minutes to kind of do a review. Here's kind of what we said we'd do. Here's how we did. Let me tell you where we're going to go in the future. That kind of a communication. At the end of that, they switch and you have these Q&As. Now, for 99% of these calls, the Q&As are not for you and me as individual investors. They're major investment groups who are analyzing these stocks. So companies like Barclays, Fidelity, Wells Fargo, etc., they're actually going to have people who are tracking stock. These analysts are going to ask clarifying questions. Now, the whole purpose of the analysts, they want to get clarity so that they can write a report, which typically they're going to either recommend. There's actually 5 responses, but the most common that we know about are going to be buy or hold or sell the stock. What are you going to do with it, right? So that's what they try and do. Long one would be an hour and a half. A short one would be 45 minutes. That's what these calls are. So as you prepare to jump into these calls, you got to first locate the call, or the transcript. Then you're going to review your notes from past calls, and then you're going to meet with your team. So let me jump into how to prepare for the call. The way I'm going to do this is I'm going to share my screen. I'm going to show you how easy it is. The easiest way that I find to do it is just go to your a basic Google page or whatever search engine you want to use, and you just open it up and start typing in what you want. So I want BlackRock. See, it's already doing there because I did my research on this, right? But anything you want. BlackRock, you could say Q1 information, BlackRock investor relations, etc. I can hit investor relations, first one that's coming up. So let me just go ahead and hit that. It comes right here. I've got BlackRock. Now, you'll also see other resources, but the most common one I'm looking for is BlackRock itself. IR is typically part of the URL. I click on that, I'm into their investor relations. Now you'll see there's a lot of information. I could have looked for Q1 information, it would take me right to it. But on their web page, you go down about halfway and here's their most recent call. So here's what I access. Right here, all quarters, by the way, I can go back and look at prior quarters and what information they're providing. The earnings release, that usually comes out the day of or just prior to the day of. And that's going to have a nice review of what they want to talk about, as well as the financial statements. The 10Q, if you remember, it's the form that they fill out on a quarterly basis to communicate their financial performance to the SEC, Security Exchange Commission. The 10K, on the other hand, that's the annual one. So here you've got multiple years of information. You want to see what's happened over the last 4 years? By the way, you can keep going. You can access this information for many quarters. The webcast is the event itself. Now, if the call hasn't happened, what's going to happen? You can click on the webcast and actually register for the call. Now, don't worry, they're not selling your information. All it does is it gives you access to the link so that you can jump in and listen to the call. Now, if the call has already happened, then you'd come to this page and you can actually listen to it. So if I click on that webcast, it'll actually have them reporting out their financial performance. And then sometimes they'll have additional documents. Some of the additional documents, this is a supplement, earnings supplement information that they provide. So a few different kind of slide information on some key contents they want to do. Now, this is not the same thing as their presentation. They actually didn't have a slide deck for the presentation. This is just supplemental information, graphs, etc., that they provide. A lot of times companies will actually have a earnings call slide deck, which will also give you some data as well. So folks, easiest way to access that, jump into Google or whatever search engine you want to, type in the company you're looking for. Real easy to access that, have that available for you at any company you may want to look at. So as you look at this experience, that's how you're going to access the transcript or call. Once the calls actually happen, they often will have a transcript, or if you just search transcript, there's a number of third-party organizations that will give you word for word, what was communicated on the call is what you're looking for. Well, once you've kind of located a call, next step is this. You're going to review your notes. You might say to me, Brent, what notes? I haven't never done this before. 19% of you said, I've never been on a call. Well, the notes you're going to review is if you've done it, you just go back to this document, my worksheet, and you actually kind of review that. Now, if you haven't done it, you can go back and do the prior quarter and do some quick review if you'd like to. If not, once you've done the first one, you just come back to those same notes of what's going on. Last thing you're going to do is meet with your team. Now, what do I mean by that? Well, if I'm a manager, I can't think of a better thing as a manager, director, et cetera, to bring my key team members together on a quarterly basis, just review what our executive teams communicate with the lens of, okay, based upon what we heard, what is it that we can do within our functional role? Whether I'm in HR, I'm in IT, I'm in finance, I'm in operations, whatever role I might play, come together with your team and have a conversation. Now, what if I'm not a leader in the organization? Well, as an individual contributor, go to your manager. Say, hey, I think it would be great for us to review these calls. And I actually participated in a webinar. They give me a nice little tool that I can walk through, talking about building your credibility. Go into your manager and say, hey, could we review this as a group? If not, just grab a colleague, somebody that you like to interact with in the organization and do it together. The reason I say there's value in doing it together is you'll learn more by kind of debriefing the tool together. So that's the prepare phase. Pretty simple. You got to locate the call or transcript, review your notes from past calls, and then meet with your team. The analysis is where we're going to introduce the framework and the two tools. So let's jump into that. For all of you that have been in one of our graduates of one of our classes, make sure you have your chat box up. You're going to help me review the 5 drivers. Now, folks, whether you're a multi-billion-dollar investment group like BlackRock, or a small little street vendor organization, little, food stand or fruit stand, etc. These are the fundamental drivers of business: cash, profit, assets, growth, and people. Now, when you look at this, I want you to think of it as just a simple mental model, a simple way to think about business, talk about business, and execute around business. So as we jump through it, just so we're all clear on what we're talking about, let's talk about cash. When you think about the importance of cash in business, fill in the blank for me. Cash is blank. As you think about the importance of business, cash is, what would you say? Yeah, Donald, Takaria, absolutely. Cash is king, the common. Any other phrases? Cash is needed for short term, Wesley says. I like that. Cash is, Ramcharan calls it an oxygen supply. Liquid, thank you, Emily. It's absolutely important for an organization to have cash. If a company runs out of cash, they die. So fundamentally, you got to have cash available. Now, if you're an investment firm, you kind of act like a bank. You actually don't own a lot of the cash. The cash has been invested in your company. You then take that and reinvest it in everything from ETFs to private equity to, investing in companies, et cetera, within the organization. I love that, Rosa, oxygen of an organization. So cash is vitally important. Now, if you want to understand what's going on in cash, you're going to look at the cash flow statement. You jump to that cash flow statement, man, it'll tell you everything: how much they generated, where did they deploy that cash, how much did they get back to shareholders, how did they strengthen their financial position. It's all available in the cash flow statement. A few metrics you might think of. One would be cash and cash equivalent, sometimes referred to just as the cash on hand. The other would be the cash they generate from their core business, what's called their cash provided by operating activities. Key metric for a company. Well, let's talk about profit. Profitability is the difference between the revenue that comes in and the expenses that goes out. If you want to improve your profitability, there's 2 levers you have. And I call these levers my business 101. Whether you're a multi-billion investment firm or small mom and pop organization, these are your fundamental levers. What are they? If I want to grow my profit in a business, I got to increase one lever or I decrease the other lever. Absolutely. Jeff, you got the bottom one. I got to reduce my cost on a per item basis, or basically just reduce your expenses. Any expenses you have within the organization, how do I reduce them? The top is increasing your revenue or sales, what you're looking for there. Boy, my cursor's not working, so I'm going to try and do old school cursive. So revenue or sales is what you're looking at. Those are the same things. Want to grow that. Now, how do I grow my revenue? Anything I can do to increase price or sell more will increase my revenue. On the cost, it's any expense you would want to look at. Excellent. We've got some good stuff there. So that's what drives profitability. Now, if I want to see what's going on from a profitability perspective, I'm going to be looking at that income statement, also referred to as the P and L. Man, my cursor, something's going on there. So profitability. Now, these two drivers, cash and profit, gets a lot of time and attention. Assets then become the resources, the equipment, the technologies you use to drive profitability and cash. Now, the definition of assets is anything you own or control which has value. If you're looking at BlackRock, what do they own or control which has value? Put in the chat box. Think about that type of a company. Remember, it's a major investment company. They're taking that cash, they're making investments. What do they own or control which has value? What will be some of those investment dollars going towards? Yeah, so stocks, they have a lot of cash. Yeah, absolutely. Real estate, excellent. Technologies or innovations, absolutely. In fact, they did some recent acquisitions of companies. So they own companies, and one of the companies is to give access to information about the private equity markets. So how do I access it? Let's acquire a company. Bitcoin, there you go. A lot of different things, okay? Anything I own or control which has value. Then I take that and I deploy that within my organization. So they're really balancing two things. And we talk about in the class. One is asset strength. How much cash, how much investment do I have in these assets? Versus how do I take that investment and deploy it? How do I use that to drive more cash flow and more profitability within the organization? If you wanted to see what's going on from a asset perspective, you look at that balance sheet. Now, then you come up here and you say, okay, well, growth is what investors expect. What do they want us to grow? Cash, profit, and assets. People are what drives the experience. Now, if you listen to their call, their people, they're talking a lot about their customers, their investment groups, their individual investors, major pension groups, etc. So very focused on building wealth for their customers. Now that both internal customers, the employees, 23,000 employees, how do we drive results? But also externally, those that buy their products or services. Well, folks, that's the 5-driver model. Now, here's how you use this in business. As you're thinking about your day-to-day activity, you're interacting in decision-making, you're trying to explain things to employees, you get information from your executive team. In the back of your mind saying, as we talk about these issues, these challenges, these opportunities, how does it impact cash, profit, assets, growth, or people? That's the framework. So one of the tools that we have is using that tool to assess the call itself from a strategic perspective. For those that have been on this before, you'll be familiar with this. If you've been through our courses, you'll be familiar with it. It's just a simple tool using the 5 drivers to assess the strategic focus of a company. Here's how it works. As you're listening to the call or reviewing the transcript, rather than trying to capture all that information and kind of distill it on your own, what you're going to do is you're going to be listening for, are they talking about cash, profit, asset growth, or people? Every time they have that conversation, you're just going to start doing slash marks, okay? Every time they talk about cash. Now, you might say to me, well, Brent, I never taken your class. What do you mean by cash? Is it just when they say the word cash? No. Here's a little definition in the tool of what I mean by cash, but as well, some examples. So if they're talking about sources or uses of cash, sources of cash, well, they talk about inflows and outflows at BlackRock. Inflow is new investment dollars, private capital, investing in their stock, different ways in which cash is coming into their business. Well, if they got that cash inflow, that's going to be cash, right? Cash outflow is when they take that cash, invest, and make an acquisition of a GIP, for example, or deploying cash back to investors. taking some of that cash and using the capital projects to fund growth. Those are all going to be cash levers, okay? Now, folks, this is an exact science. We do about 1,200 of these a year, and what we find is rarely do we have the exact number of slash marks. I don't think I've ever had that, right? If you and I were to do this today and we're listening to their call, we're not going to have the exact same number of slash marks. But doing 1,200 a year, what we find is that the top 2 or 3 drivers as a group will rise to the top. We'll all be seeing and saying the same thing. Once you get done with that, your next step is to answer 4 simple questions. Which drivers seem to get the most attention and why? What are the 2 or 3 key points the executive was trying to make? What are their goals, trends, or objectives going forward? And then what key questions or concerns were raised by the analyst community? Once you're done with that, after the call, you kind of, over the next couple of days, kind of track what's happening on their stock price. What are analysts saying about their business, et cetera. Now, imagine if you did that in your company the next 2 or 3 quarters. It's absolutely going to build your credibility as you'll listen to what your executives are talking about and be able to articulate that as you're defining the jobs, the actions, the activities that you're focused on within your role. Well, folks, we don't have enough time. We have about 30 minutes. I don't have time to go through the whole call and have us as a group go through it. So what I have is I've got 2 quotes. What I'd like you to do is open your chat box, and I'm going to give you the quotes, and you're going to go ahead and in the chat box, just type in what drivers you're seeing. Now, folks, remember, you might hear one sentence where maybe 2 or 3 drivers are being communicated. For example, if they say, my revenue's going up by 15% from Q1 of this year versus Q1 of last year, what's going on? Well, revenue, that's a profit driver. It's going up. That's going to be growth for sure. Now, if you recognize that profit eventually is going to become cash, you might even have cash as well. In the end, it really doesn't matter how many slash marks. As a group, you'll find the common themes will rise to the top. So let's go ahead and do that. The first quote I've got here is from their CEO, Mr. Fink. I'll just read it, and then you have your chat box. Just tell me which driver are they talking about. Here we go. We delivered above target 6% organic base fee growth. Base fee growth, that's from their consultant services that they provide. So it's one of their key revenue generating. About, at least in Q1, it was about 80% of their revenue came from that. So which represented our best start of the year since 2021. That's in a quarter where the S&P ended 9% off its February peak, okay? So one of the, S&P, a great index, they're off by 9%, yet they're able to grow organically. So the core investments, they grew by 6%. What drivers are we looking at? Well, of course, growth. You got a lot of growth in there, but yeah, profitability can fit in there as well. So yeah, growth is definitely in profit. I would agree. Okay, here we go. Next sentence. It's proof our BlackRock's enhanced structural strength where we can power organic revenue growth that's undeterred by market movement. Basically, we can keep growing even with this fluctuation in the market. What driver are you seeing there? Absolutely. When it says the term, it's pretty nice right there, right? Growth. Now, where would revenue fit? This is the one that can be challenging. I typically put it with profit. Why do I do that? That's one of the key levers that drives profitability. But again, they're interchangeable. If I grow my profit, as soon as I collect it over time, that absolutely is going to drive cash. So if you want to put cash, no worries. Not going to condemn you on that. Revenues grew double digit and our as adjusted operating margin expanded by over 100 basis points. When you hear basis point, for every 100 basis point, that's 1 percentage change. So rather than say it grew, expanded by 1%, they say by 100 basis point. First quarter total net inflows were approximately 140 billion. Now inflows, this one's interesting. Cash coming in to fund growth within the organization, excluding the episodic institutional index equity activity, blah, blah, blah. That's a small portion of their business. The individuals divested some of their assets. I think it was around 46 billion or something like that they divested. But low margin, they don't get much return off of those. Important. So which drivers? Yes, we got cash in there. So we're starting to see a little cash. We got profit and we have growth. Importantly, net inflows, again, that's to me is a cash one, and organic fee-based growth were well diversified across the entire BlackRock platform. So in real estate, in insurance, in ETFs, stock market, wherever you want to look at, we invested ahead of our secular growth opportunities and ahead of where our clients are going. So put what drivers you see in there. And finally, this quarter represents the largest organic-based fee drivers, where strategies where we developed in just the last few years, including GIP, that's an investment that they made, acquisition they made, I should say, our digital asset portfolio, Ethereum, active ETFs, as well as our tech and data-driven systematic equity franchises. There's a lot that's in that. Basically, they're highlighting different types of investment opportunities and taking that cash, investing in GIP, which is going to be more structural infrastructure investment groups. So they acquired GIP. Then you have some tech companies in there. You have some stock market. Basically, they're making the statement that they said earlier, that this growth is across our entire platform. Now they're describing some of these ways in which they invested those dollars. Well, folks, scroll up and down in your chat box and tell me, just as you look through, what driver seems to be rising to the top? We've seen a little bit of everyone, but what drivers going to the top? It's growth is definitely going to be one of those top drivers. See, even with, we may have different slash marks, but we're definitely seeing growth. And yeah, we're seeing a little profitability there. Assets is coming in as well. Well, here's from their CFO. Let me just quickly have you review it. Just scan through it, put in my chat box. What are you seeing? Which drivers are you seeing? I can underline some trigger words for me. So these different ones that can trigger. Again, that 6%, we got a growth number. Here's growth number. So kind of reiterating some of the things that Mr. Fink had said. Great question. So one of the Rosa asked the question, isn't growth always a top focus for most business in regards to shareholder return? Great question, Rosa. And yes, definitely when an executive's talking to the market, growth will often be a key focus. Why? That is what investors expect. So Rosa, you're absolutely right. Even when a company's struggling, you go back to 2020 when COVID hits and companies are everything gets shut down. And so you're not performing as well. Companies that weren't performing, they'd say stuff like this: I restructure, I divested, all these things were changing. And then they would come back and say, now we're ready to grow. So even when they're struggling, growth is going to be one of the top ones for sure. Well, yeah, you got a little people right here at the very beginning. A lot of growth is in there. Yes, Jessica's saying, I noticed people isn't used as much. Now, that's interesting. Now, remember, people, there's two groups: shareholders, investors. So that what we call an external customer as part of our people driver, but also internal would be team, colleagues, peers, how well we work. The 23,000 employees, how well are they working? Why don't they focus so much on that? Now, you'll hear a lot more if you went through the whole call, a lot more around people externally. So shareholders, partners, etc. You'd hear them talk about that. But you don't hear much about the internal team. I think there's 2 times in the whole call where they said, we really appreciate our BlackRock team members for all the results, etc. Now, why is that? Well, you're talking to shareholders. It would be my explanation, which often shareholders, whether we like it or not, are not necessarily so concerned internally unless there's some major challenge they're dealing with. Maybe they're having a hard time filling spots, etc. So they need more talent. Maybe that would be something they would bring up. But typically, you don't hear a lot about that. And that's because of who they're talking to. Well, folks, again, we spent 5 minutes on that. Let me just kind of review. So in the end, it might look something like this, right? Where you've kind of gone through, you've done a bunch of the 2 that kind of stood out to me, and really profit and cash also had some closeness. But the 2 that I'm going to highlight are going to be these 2. So we all saw growth. We're seeing some assets. So the next step would be go answer those questions. So I've answered them here. Let me just kind of walk through high level what I saw. And if you happen to have reviewed it yourself, you want to include some of your insights as well, let's do it. Now, one of the things you'll notice, again, when you do this activity, especially if you're doing it with different functions, remember, when you're listening to this, you're going to capture all this information, but then you're going to look it through your function. For example, if I'm in finance and accounting, I might see it a little different than HR. That's actually positive, right? You hear what's going on in the business. Then I go back to my functional area and say, I've got this functional expertise. Based upon what I heard, what should I be doing? What should I be driving towards? So as you go through it, I may have saw something as kind of an external consultant looking at the BlackRock, that if I was an employee, I might see something different. In the end, it's not an exact science, but what you find is just by going through that exercise, you get real clarity on what's going on in your organization. So let me go and jump in the first one. So which business drivers seem to get the most attention and why? Here we go. The two that stood out to me were growth and assets. Why? What did I see? Well, this idea of above target organic base fee growth. So what they're saying is, let's take the same set of assets we had last year at this time. How much growth did we get? So that organic growth, 6%. Their target is north of 5%, and they did that. That, by the way, that's outside of the acquisition. So this is their existing business. Their assets under management. You saw growth to $11.6 trillion asset under management. You don't see it on their balance sheet. What that is they take all that money and they invest acquisitions, ETFs, etc. So they're taking that money and investing about $11.6 trillion. Just to give you an example, the 4 or 5 that I looked at competitors, Blackstone, Apollo, KKR, all those are about $1 billion to $2 billion. They're like, 6 to 10 times that more at BlackRock than these other organizations. Strategic initiatives in private credit, infrastructure, and digital assets. So where do they want to expand? Taking that cash, and some of it private credit, so private investors can get access to some of that cash to invest in their businesses, etc. Infrastructure, taking that cash. So CIP was an infrastructure. That acquisition got them into infrastructure within communities, organizations, etc. Basically, building out the infrastructures of utilities, pipelines, etc. within areas of the world. And then, of course, digital assets. A big AI play was a place that they invested. Recent and upcoming acquisitions, the GIP and Preqin was a group that it's a data center that actually gives them information in the private market. So how do I understand what private companies might be doing as we look at from an investment perspective? And then HPS is an acquisition that's going to happen here in 2025. Geographic expansion, new product offerings across global platforms, AI becoming a key part of what they're rolling out. All these represent ways to help their clients. So you could even see a little people component. So if I was to summarize, growth and assets dominated the discussion. BlackRock emphasized organic base fee growth, record asset under management driven by private markets, ETFs, technology platforms. This reflects their continued strategic positioning around scalable, less market-sensitive revenue streams. If they're able to grow at a 6%, even though the S&P is off by 9%, that really speaks to their strategy here, growing independent of what's going on in the market. Well, some of the highlights there, what do they do? Their strategy, connect investors, corporates, and public sector to the power of capital markets. How do we access cash? Serve clients as a fiduciary, meaning their whole goal is to help their portfolios expand. Create scale and network economies across one BlackRock platform through long-term relationship technologies, etc. Well, let's jump to the next question. So what was the next question? What were 2 or 3 of the main points the executive were trying to make? One was this idea that BlackRock's business model is structurally stronger and more diversified than ever. So strategic acquisitions of GIP, that infrastructure play, the small market or private markets with Preqin, upcoming HPS are expanding our capabilities and future growth. So really building a portfolio to withstand the ups and downs in any one. So for example, here's this GIP, Global Infrastructure Partners, 9 months since closing, really focused on that infrastructure play. Ports, so they, acquiring MSC, you may be familiar, Mediterranean. Anyways, it's the big crates that they travel So they have like 110 ports that GIP has access to. So that's an investment structure they're doing. The APS private credit that they're focused on here coming out in the new year is a big play for them. Mediterranean Shipping Company. Thank you, Rosa. Yes. They also have a cruise side of that, MSC Cruise as well. That's all part of the same company. BlackRock is executing on a long-term structural growth strategy, investing in scalable, resilient platforms such as ETFs, private markets, and technologies. Vision, a new building towards our 2030, 500 million plus businesses, helping clients access innovative opportunities. How do I help those 500 million plus companies be able to access private markets for wealth, digital assets, active ETFs to grow their business? And then finally, despite a macroeconomic uncertainty, BlackRock is delivering consistent inflows and earnings growth through trusted partnerships and innovation. So a lot around growth as a company. Where do they want to grow? Through the assets that they're trying to acquire within the organization. Well, what were the goals and objectives going forward? Well, BlackRock aims to. So what are the future-looking things? Continue to deliver above-market organic growth, expand its footprint in private markets and infrastructure, accelerate adoption of digital and tokenized assets, broaden assets to private investments within retirement plans, solidify its presence in growth regions like India, Europe, and Middle East. So they're looking to expand beyond into some of these newer markets. Well, if you look at what key questions or concerns were brought up by the investors, here's some of those that I would highlight here. First of all, ask questions around integration of private markets into retirement products and potential regulatory constraints. So taking some of their unique assets, how do I put them into different requirements around pension funds, retirement products? How do we make sure that the private markets can enter that market and get over regulatory challenges around that? BlackRock global strategy in the face of U.S. market and geopolitical volatility. We're seeing this on all the calls, right? Tariffs, how that's impacting them. Now you're talking about geopolitical issues with Israel and Iran, Gaza area. You've also have Russia and Ukraine. So all these geopolitical issues, how does that impact your organization? The competitive ETF pricing landscape, especially in response to Vanguard fee cuts. So Vanguard reduced their fees for services. So how are they going to compete in that market once Vanguard's reduced their fees? So what do we know, folks? What do we learn? Well, what we've learned thus far is, man, they had a great quarter. They're diversifying their portfolio to drive greater cash flow, greater profitability for their organization. And in a quarter where there was all these geopolitical, international challenges they dealt with, they're able to grow when other indexes weren't. Real positive message to the market. So where do we go from here? Well, now that we've seen what they communicated, let's jump in and look at some of their financial metrics or measures. So the second tool is called the Navigating the Financial. Here's how it works. Basically, on the left-hand side, you got the 5 drivers: cash, profit, assets, growth, and people that we talked about in our courses. Next to it, you got key metrics or measures the organization's focused on. Now, what I've got here is these are the most common key metrics companies will look at. Now, if you know your company has, for example, operating income as a key profit measure, well, rather than using net income, use your operating income. Or maybe they use EBITDA. Maybe rather than just cash flow, they use a free cash flow. You can use whatever the company has, but what I've got here is the 10 most common basic metrics any company might look at. So you have the key metrics, then it tells you where to go to find these key metrics. If I want to know where cash is, I'm going to go to my balance sheet. That's where I'm going to go to find that. That's the real value. You don't have to take in our class. It can tell you where to go. Now, if you're kind of like, I don't remember what net income tells me, there's this great website called Google. Type it in. What is net profit? How should I think about it within my role? Is a great way to capture that. Or come join us in one of our classes. We'll help you walk through that. Now, if there's some sort of calculation you have to do, you're going to see that over here. And then you can compare Q1 versus Q2. So that's how it works, folks. So let me just kind of walk you through a couple of these, and then we'll wrap up the tool and we'll jump into our application activity. So here's how it goes. Let's go first with cash and cash equivalent. Well, based upon my tool, just to make sure we're on the same page, you tell me, based upon my tool, where do I go to find my cash and cash equivalents? What statement do I go to? Excellent, Sergio. I'm going to go to my balance sheet. Now, you don't have it in front of you, but I've got it here in my slide deck. So here we are. We're looking for the line item cash and cash equivalent. When you see that line item, tell me how much cash and cash equivalent did BlackRock have on hand as of March 31st, 2025? How much cash were they carrying? You're looking for cash and cash equivalent towards the top. There you go. Excellent. $7,747 million. You put that over there, you got the first metric. The next one we're going to jump to is our cash from operations. Based upon the tool, what statement do I need to go to? Put it in my chat box. We'll just do a couple as a group. Make sure we're comfortable. Yeah, I'm going to jump over that cash flow. Again, you don't have it, but I do. You're looking for net cash provided by operating activities. About halfway down is where you'll find it. So kind of right there is where you're seeing it. Oops, it's this one right here. And they actually have negative cash flow. That's not very common, although they did have it last year at the same time. Now, a couple of things that impact that. They do a big compensation payout in Q1. So what that's saying is they had more cash going out than they had cash going in. Couple big investments that they did during that quarter. Look at this right here. Some other investments. They took a bunch of that cash and they started to use it. And so it was a big, think of it this, I had a lot of cash in my checking account. I went out and invested in Q1 of this year. Now, over the year end, it's going to get positive. But in Q1, they overspent versus how much cash came in. They overspent by $1,128 million. So that's the number you'd bring over. Well, you could keep doing that. You go to revenue, what statement I need to go to, that's going to be the net income. So I go to my total revenue. I walk over here, I get to the revenue. You got to kind of get through. There's a bunch of line items to get to your total revenue, but right there's my total revenue number. I plug that in. Now I want to get my net income. I'm going to the same statement. Jump down here to the bottom. Here's my net income attributable to their shareholders, $1,510 million. I plug that in. Then I take my $1,000 calculator, take the 1,510 divided by the 5,276. That gives me 28.6%. Now, if you haven't been in class, you kind of, what does that tell me? That says for every $100 you brought in your company, you generate $28.60 of net profit. Now, is that high or low? Well, the S&P 500 is typically around 10 to 12%. So they're about 2 to 3 times that. Absolutely. Very high. You expect that. They're an investment firm. They're trying to get great returns to their investors. So you expect their profitability would show that as well. Well, folks, we could take another 10 minutes and we could wrap this up and get these all done. I don't have that time because I want to get into our application. So here's the numbers. Here's the rest of the year. Now, once you've done one quarter, I highly recommend go back to the same quarter the prior year. Or if you want to do it sequentially, you could do a Q4 of 24 versus Q1. What happened just between those two quarters? Or go back to the numbers Q1 of last year. You'll notice their margins are a little bit lower than what they were in 2024 right here. Our profit margin's down a little bit. Our equity ratio is stronger. Your growth numbers, huge growth in 24 Q1 versus what we saw here. Now, if you wanted to get detail, you'd go back and look what's behind the numbers. Folks, that's the tool. We can look at it and say, okay, you got that 28%, you got great cash available. They want to get that cash flow positive, and they want to get back to growth on their profit numbers. So I'd love to see that within the organization. Well, folks, that's the analysis phase. You've been able to cover the strategy. Then you're able to look at the financial performance. Now, where do I go from here? The last part of the tool is the apply phase. Now, what you're really driving towards is driving these types of results. Now, this is results. One of our customers had a third-party assessment group come in and say, what's the value of employees to understand business and financial acumen? What's the value of the program that Acumen Learning brought to you? And they've actually found a 300% return that they drove. But the real outcome are these right here. Imagine doing this the next 2 or 3 quarters. Here's the types of outcomes you're going to get. 84% of those that were assessed during this assessment said that getting better at this improved the performance of their business or function. 81% said it increased collaboration. 77% said it improved upward communication, your ability to communicate to your managers, your leaders, etc. 77% said it improved employee engagement. 75% increased business focus, and then 84% said improved teamwork within the organization. Folks, that's what this can do. So the last step of it is most important. You got to do something with it, to know something, to understand there's these tools, and to not do it, to know and not to do is not to know. So let me walk through the last part of it. The last part is the apply phase. It's basically 3 steps. You're going to jot down the key insights you gain. Based upon what you heard, what's the top 2 or 3 things you should focus on? Then finally, go have a conversation with your manager. In my quick review, high level, here's some of the key insights I found. Becoming a platform company, not just an asset manager. They're getting big into technology. Their annual fees is a big part of what they're looking at. It was only about $500 million this year, but a lot of conversations around building a reoccurring platform resource for their customers. Strategic acquisitions, big emphasis on balancing out that portfolio, getting different types of acquisitions that you'll bring in, which some of those are platform companies to help drive the number one insight there. Growth is happening even without market tailwinds. They don't have tailwinds behind them. They're dealing with challenging geopolitical issues, global present. I'm being impacted by a lot of what's going on. We're building trust at scale. This is our differentiator. And then capital allocation is strategic. Efficiency really matters. So what would I go from here? Well, if I was an employee, I'd be asking stuff like this. How does my role scale platform value, deepening long-term integration? Understand how your team supports the integration of the acquisitions. How do we drive those KPIs they talked about? Be aware how our team's investment, time, budget, headcount drives long-term value creation. Those are things I could take from this, and in my role, go back and say, let's have a conversation with my team members. Now, I'm also a consultant, facilitator. Here's what I would look at. I'm going to compare this against peer information. I'm going to share this with my consultants, clients, etc. And if you're part of BlackRock, folks, we'd love to work with you. Help you understand your industry and how to make decisions by seeing the bigger picture of your organization. Well, folks, that is the tool. We're going to put in the chat box the tool right now, so you have that available to you. Remember, going back to, so let's say you completed this on their Q1 numbers. Now here in about a month, you're going to get their Q2 numbers. The first step of that is that prepare phase. Remember, you got to locate the call, but step number 2 is review your notes. If you've gone through this exercise, you just pull that document out. Okay, this is what they said they'd do. Here's what I said I would do. Okay, let's see what happened. What happened in that quarter? But also a self-assessment. I said I was going to do something. What did I do? What was the results of that is key. Well, folks, my last question for you as we wrap up today. Who are you going to assess? Taking this tool that Brooklyn put in the chat box for you, who are you going to go assess? Company you work for, sell to, compete against, partner with, invest in, interested in, or will you come next month, July 30th, and walk through MicroStrategy's organization with me? Folks, love to have you on that. That's going to be July 30th. So go to the web, go to acumenlearning.com/webinar. You get access to the tool. If you want a review of these concepts, there's a self-paced e-learning resource. We'll give you $100 off it. If you're a manager, you want to bring your team together and get better at this, give us a call. We'd love to come and help you understand, overview, different ways you can approach this virtually, self-paced, or face-to-face options for you. Folks, it's been my pleasure to spend some time with you looking at one of the biggest, most successful large investment firms, BlackRock today. Looking forward to seeing you next month as we get a chance to look at MicroStrategy's, a Bitcoin play. Thank you very much. Have a great day. I'll stay on for a few minutes. If there's any additional questions, feel free to put them in the chat box. Team, did we miss any questions? Talked about the shareholder return question. Oh, what's the market cap of BlackRock? I didn't get that. Did anybody answer that from our team? Let me jump in and we'll get that real quick. BlackRock's market cap. I can give you it here shortly. Where would you go to find that? Maybe I'll just share my screen for those that are interested. There's all sorts of websites you can go to. Let's see. I'm sharing my screen. Are you seeing it? Let me share here. I shared the wrong screen. Let me get to the right screen. Right here's where I'd share. Okay, should be able to see that. So you can just type in their market cap. I like Seeking Alpha as a company that I use quite a bit. So if I just go, oh, here's BlackRock right here. I had it open already. For those who are trying to remember, what does market cap mean? Well, it's basically take the number of shares outstanding times the share price. That's going to give you a market cap. So market cap was 152 billion is their market cap. Again, remember that asset under management does not mean that they own those assets. And so it's their portfolio of assets that they're investing in, where they may be a very small owner, but they're able to control that asset, et cetera. Great question. Let me go back and see if I've got any other questions here. Otherwise, we're going to wrap it up for today. Anybody from my team see any questions we missed before we wrap up? Okay, Adam's asking a question. Let's see here, Adam. Where's the question? Let's go back to my chat box. Adam, what are the other types of financial acumen classes offered? Are there P&L specific classes, budget, et cetera? Or is it mainly earnings calls? Absolutely. So in our portfolio, anything to do with business and financial acumen, we can provide here. Now, obviously, from an individual perspective, it would be different. It'd be more like a coaching opportunity than a team. But with teams, we'll go in and we'll do stuff on forecasting. We'll do stuff on budgeting. Now, we often will start with the framework of the 5 drivers. Let's get a base understanding there. But yeah, we do stuff on capital budgeting, capital projects, everything from return on investments, payback periods, to all the way through an authorization for expenditure, where you're doing net present values, internal rate of returns, et cetera. We'll talk about budgeting principles, forecasting principles, et cetera. Those are typically part of like a group or a company exercise. Adam, if you want to put your email in the chat box, or we can look up your email, I think, as a registrant. Give me a thumbs up if you want us to reach out. We can just share some of those, that information. Maybe we'll just reach out to you. By the way, also on our YouTube channel, Adam, you can access, there's a great 15-minute or so video where our CEO, Kevin Cope, walks through the basics of a P&L. Now, one of the things that we find is really valuable is to do it customized, where we actually come out and work with you. It's hard to take a generic P&L and then you go back to your corporate P&L and you're trying to bridge that learning gap. So what we do is, if we were working with BlackRock, for example, we'd have their P&L right in front of them. And if it's, hey, we want to look at an operational P&L inside of BlackRock, we sign all the non-disclosures. So I'll literally bring out an operational P&L from a certain portion of their business, and we'll use that as the tool to learn business and financial acumen. Yeah, Adam, anything you'd want to do around business. And by the way, we can teach it or you can teach it. We actually have a T3 process. L&D, we've done it with L&D mostly, but we've also done it with finance and accounting groups. They do it as a rotational program where finance and accounting learns how to teach the concept. Now, you might say learns how to teach it. Well, finance and accounting are really good at the metrics and measures. Well, the challenge is sometimes, not always, but sometimes is their ability to facilitate that learning experience. So we help them understand how to make sure people capture the information, and then they go and teach it. And it's a great way for the company that I partnered with that did it. They're going outside of their kind of corporate office, going to different locations, teaching these concepts where they're interacting live with, groups, manufacturing groups, production groups, et cetera. Really built a greater understanding for the finance team on how to think about the business and articulate finance principles. So love to talk about that. Adam, thank you. We may just send you an email so you can respond and introduce us to whoever you'd like us to talk to. Good to have you on the call. Folks, I think that's all the questions. Folks, it's been our pleasure to work with you. Hey, hopefully you found some value. My goal, again, was to inspire you enough to do something with it. Go do something with it. It absolutely will build your credibility. It'll build your career, and it'll build your companies. Thank you very much, and have a wonderful day, night, evening, wherever you're calling in from. Thanks, folks. Logging out.